Hey everyone, happy Thursday, January 11th. It's about 10:48 a.m. on the West Coast and time for another market updates. So far in 2024, the markets have stayed pretty flat. We had some big news come out since I last talked to you guys. Last Friday, we got the always important December BLS jobs report. This has been a big one. We know that the Fed has paid really, really close attention to the job markets, and it came in above expectations, which is not what we wanted. It was, the amount of jobs created was supposed to be about 170,000, and it came at 216,000. But big surprise here, they made negative revisions to previous months, like they keep doing. So let's take a closer look at this stuff. And like I said, came in above estimates, but the last 2 months they revised negative 71,000 down. So as we've talked about, it seems like this is what happens every month is they release their BLS jobs reports. It comes out a bigger number than expected. The markets freak out. But then when they release their next report, they go, oh, hey, by the way, we were wrong on that last report, and we're going to negatively revise that. So all year long, that's been going on. I think an average of 50,000 or so negative revisions per month so far. So it makes it kind of hard to trust this report, but we know that the Fed is paying really close attention to it. So it's just something I guess we got to deal with at this point. But fully expect more negative revisions to this 216,000 number next month. So remember, there's two parts to this BLS jobs report. There's the business establishment survey, and then there's the survey where they actually call people that are on unemployment. But the business establishment survey showed, wages going up, which is interesting because it kind of didn't jive with the ADP. ADP has the actual payroll data, and that was showing it going down, where this BLS jobs report showing it going up. And another thing to keep in mind is that the UAW, the United Auto Workers, pay increases hit in these numbers. So that was going to, bump those up a little bit. Also, like we talked about, the other part is the household survey where they actually call people and talk to them. According to that survey, there was 683,000 job losses. Unemployment, we expected to go up. Unemployment stayed where it was. And the reason, 683,000 job losses, how did unemployment not go up? Is because the total labor force dropped by 676,000. So that's not, people, that's basically people aging out of the unemployment. Maybe they haven't looked for a job for 4 weeks. So those people are still out there. They're just not being counted in these numbers anymore. So, if you throw those numbers back into this labor force and unemployment number, the unemployment rate that we got that came out in this report was 3.74. If you throw those numbers back in, it's 4.13. So a lot big different number. The markets would react a lot differently. So, just keep in mind with these numbers, there's some, mathematical gymnastics that could go on when they come up with these numbers. And it really doesn't jive with a really strong economy and the way things are looking. And here's another part, to look at with this household for survey. They multiple job holders went up by 222,000 to a new all-time high. That doesn't scream strength in the labor markets. Full-time jobs dropped by 1.531 million. That's a huge number. And then part-time went up by 762,000. So if people can't find full-time work, if people have to get second jobs, if people can only find part-time work, again, that doesn't scream, strength in the job market. So luckily, though, the markets didn't freak out. Originally, they were down quite a bit off this, but then they kind of digested all that information we just went over and kind of ended up flat for the day, which, again, when you see that headline number, didn't think that was going to happen. So that was good that we shrugged it off and were able to look at the inner data. Next thing we got today actually was a December CPI. So the first look at inflation for December, and that came a little bit above expectations too. The headline was plus 0.3 and the core was 0.3. Let's take a closer look at this stuff. So like I said, the headline went up from 3.1 to 3.4, but keep in mind it's because last December's number, the one that this was replacing, was really, really low, almost zero. So that's why that went up. The core actually year over year, even though it went up 0.3, it's replacing a higher number, probably 0.4 last December. So that went down. The core went from 4 to 3.9. So that's good because we know the core is the thing that the Fed's paying closest attention to. And like we talked about before, shelter is still showing a month-to-month, gain of 0.5%. So it dropped from 6.5 to 6.2%, but still way above what we know it is in the real world. It's about 2.3% is what it's running. So we know we're going to get some benefit there in the long run at some point. Another couple things that were a little interesting here. Energy hurt us. It was a 0.4% gain where, oil was down in the month, a couple other things, but that has to do with how CPI captures this data. And then used cars were up 0.5%, where every used car data, the Manheim index, things like that, are showing a drop last couple of months. So we're still showing a gain in these numbers, where in the real world, just like shelter, it's coming down. And then motor vehicle insurance, we've talked about this. This was up again 1.5%. They really should take this out of core because, the things that affect this motor vehicle insurance is theft and weather and stuff like that. That can't be controlled by rate hikes. So that's been hurting us. Whereas, again, it's something out of their control. Everything they're trying to do to fix the economy or, make inflation come down wouldn't have an effect on that. So that, wasn't the greatest inflation number for us either. But again, the markets have shrugged it off and kind of looking at it, how they should look at it. Initial job claims too came in low, but again, keep in mind we've been going through holiday season, so these tend to be low every year. 210K was the estimate, came in at 202,000. Next thing we got miscellaneous core logic came out their home price index for November. That was up 0.2%. Again, core logic is still at an all-time high. That's a new all-time high. As we get more of those metrics come out, we'll update those. But again, good for current homeowners with home prices going up nationwide still. Average 30-year conventional. So we're basically where we were last week. It was 6.76. We got up from here and we came back down. So again, if you told me BLS jobs report would have came in stronger than expected, inflation would have came in higher than expected, I would not say we would be at 6.76. So that's a victory in its own to hold the gains that we had. Next thing tomorrow we get PPIs, the producer price index. And that's a big one because that's, it's a good idea. It's a good indication of what future inflation might be since it's being passed on to the consumer. And also they get a lot of that data out of that for this PCE inflation that's coming up on the 26th. And we know that's the Fed's favorite form of inflation, the one they're going to be taking a look at. And then the Fed, their next meeting is January 29th. Right now the market's probably not going to cut, but March and May is still kind of looking when we might get the first rate cuts, which is when we'll really see mortgage rates start to move down. So overall, not the best news that came out this last week, but it's good sign that the markets held where they were at. They didn't get freaked out by it, and we held our gains that we had. So, if anybody needs anything at all, please don't hesitate to reach out. I'd be more than happy to help. Have a great day, everybody.